It was broadly in line. There were, of course, a few misses as well, but I'm guessing the street might take it a bit more positively versus negatively. At least the brokerages seem to have upgraded their target prices as well as some of the estimates, so I'm going by that. Now, overall, in terms of numbers, the NII was up around 18%, bang in line with our expectations. The pre-provision operating profit was also up around 10%, and overall profitability jumped up by around 17%. The advances and the deposit growth rate continues to be quite healthy, though for deposit, it was up just around 2.5% quarter on quarter. So there are parts of the street which are worried about that, as far as the deposit growth is concerned. CASA was also, steady at 38.5%, though it's of course off on a quarter on quarter basis. The asset quality was something which was, worrying the street a bit because the slippages figure was a bit higher. The gross slippages came in at around 1765 crore. Management had indicated that it could be closer to 1200 to 1300 odd crores. So there was a bit of a negative surprise there. However, they did mention in their commentary that it's a bit of a one-off. Overall, the slippages remain under control and they will normalize from here on. The other slight negative was that the company has used up its contingent provisions for another quarter. So that's something to watch out for. Overall, in terms of the cost to income, they've guided that it's expected to come down to 45% initially, and from there it will come down to 41 to 43%, and the ROA, ROEs are also expected to improve going forward. Overall, the book value per share currently is around 1.8 times to 2 times, depending on, of course, your estimates. But overall, Nikunj, looks like the street has given it a thumbs up. Of course, it's not going to be a big beat, but after HDFC Bank, the expectations were muted, so maybe purely on that.
Sinisha, everyone thought that HDFC Bank numbers are more like a macro event. That's like a canary in a coal mine, that's an harbinger of what would now hold true for the entire banking sector per se. And what was that communication from HDFC Bank? War of liability will continue, and they will be forced to slow down growth. Now that is not the messaging from IndusInd Bank. I would look at IndusInd Bank in two ways. First, the quarterly numbers. The slippage part, yes, it is slightly above, but that's manageable is what the management is saying. So let's take that part out. Second, are they steady? Well, they are steady both in terms of maintaining the return ratios, and they are growing at about 20%, which is much higher than the industry average and a very decent and a very respectable number at that kind of a base level. C, the valuations are not really stretched. Then, if one looks at the trajectory for IndusInd Bank for 4 quarters now, Sumant Katpalia and his team, they managed to keep the trajectory higher. What is the higher trajectory for a bank? NPA is low, cost to income ratio coming down, and growth, which for me has to be closer to 18 to 20% without raising capital. That's a decent combination for anyone to have. Now you can't kiss goodbye to the Indian banking sector. Yes, there are going to be push and pulls which will happen, and I think IndusInd Bank in last 1 year has done very well. You may not see too much of market reaction to these numbers. I don't expect a bout of short covering also, because the stock in a sense did not see that kind of an F&O built up. But for a stock which a year ago, Anisha, everyone had written it off, I think it has done rather well for itself, and the banking sector purses down. And I think the steady outperformance here to stay. My sense is, looking at the numbers, that we are in for more earning surprises rather than earning disappointment. I think for HDFC Bank, it's the other way around. So, with banking stocks, Anisha, you always have to understand that banks is a cyclical business. There are times when some banks do. There was a time when HDFC and Kotak did fantastically well. There's a time when ICICI Bank did fantastically well. There's a time now PSUs did very well. My sense is that IndusInd Bank and Axis Bank, I think they're that curve now where you will actually see more upgrades and less downgrades.